Hello, everyone. Welcome back to the Rational Investors recap of our daily brief offering. This is our 10-minute summary. Try and get it around 10 minutes. I've got the mayor here trying to keep me focused and make this nice and short and sweet message for you. I guess what we'll start off with, and really this is sort of a semi-conversation because we've talked about this lots, but I'll also maybe pull up the stock market as well. But US dollar is actually catching a pretty nice bid here, nice inside bar reversal here today. And of course, this is all about, does the Fed cut rates? Does the Fed not cut rates? How are the fear proxies acting in the marketplace? Do people think that growth is still on track? And as we sort of talked about at length, we've got a Fed meeting coming up here at the end of the month. And really, it looks to me like the coil is continuing to coil right into that event. We have a matrix on the site. Let's see if I can find it here for you. Of what I would consider sort of the market's current fear proxies. We've got Japanese yen. We've got, of course, good old Bitcoin. We've got gold, and we've got the treasury bonds. And you can all see that they're, number one, they're at the top ends of their ranges. Some of them are looking very heavy. Yen, for instance, Bitcoin, for instance. Gold, surprisingly enough, is hanging in here. And actually, we'll talk a little bit more about silver shortly. But you can see where reload zones are. You can see where the original double bottom breakout is here. So I'm still watching gold with a bit of a jaundiced eye. And then finally, we have treasury bonds on here. And you can see that just over the past week or so, the bond market's come off. Interest rates have gone up on the long end of the curve. And so we're watching how these markets are acting in correlation. We'll talk, of course, more about crypto in a moment, but just wanted to make a quick comment about how the fear proxies in the market seem to be a bit softer here. And as I said, to start off this broadcast, we can see that the US dollar here is catching quite a nice bid. Interesting too, though, which kind of surprises me. It was a little bit of a shock, but Mr. Trump has come out and basically tweeted again about how he thinks that more tariff kind of talk is in order. And on a very short-term basis, just intraday basis, you can actually see the U.S. stock market went and M'd out here. So you never know exactly how these things are going to play out, but hopefully everybody can see the little M that came in, the happy face. You can see the last time it M'd out, we had to go through quite a period of correction there before we actually started Wing again in stocks. So long and short of it here, we're seeing initial sort of signs of failure. And based on the algo that I run on the site, you can see that the algo right now, very confused. It was thinking bullish, then it's flipped over to bearish. We do have an M top working. That is that top that I was talking about just a moment ago. But you can see stocks now are sort of second guessing themselves. Do I really want to break down? I'm not quite sure. But as we were going through the daily brief, we were pulling up things like the FANG stocks. They didn't seem to be coming under too much pressure. So maybe this is just all about his tweets. Here is that S&P chart. There is that double top. There is that fail level, and there's the algo. I'm not quite sure what I was just showing you a moment ago there. Sorry, guys. So we're keeping a close eye on these potential tops coming in the market. And, of course, we're now officially into second quarter earnings season. And we've got some of the companies, the big companies in the States are reporting, and we're getting a lot of mixed messages. Some of the tech stocks are doing okay. Some of the transportation stocks have actually done very well, JB Hunt in particular, but we won't get into that today. Okay, so we talked a little bit about yen and fear proxies. There's the gold market, another fear proxy. I put out a tweet this morning about how I think that there's a high correlation between yen, gold, U.S. Treasury bonds, and good old Bitcoin. But before we leave this sort of topic of fear proxies, I wanted to just take a quick boo. We were most interested in this morning on the silver market. And as you can see off here, we'll just hide this. This is the silver chart. You can see she's catching quite a bid here. Maybe this is ultimately, finally, silver's opportunity to play catch up, because keep in mind the gold silver ratio has just been an absolute train wreck in favor of gold of late. So we're actually going to maybe dig deeper into tomorrow's daily brief on that gold silver ratio. But interesting to see how silver is perked up here. And I'm wondering whether traders are like, I don't know whether I really want to buy gold. It's had such a huge move up here. It's consolidating. Maybe we're getting ready for another leg higher. Tough to say. But I do see a lot of traders very interested in the silver commodity this morning. And sort of an aside to that, the reason why I mention all of this, a lot of the silver stocks themselves, not really the best setups right now, but this is a really interesting one. Great Panther. They're listed both in the Canada and in the States. There is the US stock. You can see, if we just do simple things like reload zones off of this entire range, you can see we are in a buying window. And I pointed out to the community this morning, I thought this was really interesting. We're in a reload zone within a reload zone. And then if you drill down to even a lower time frame, we're not so much now, but this morning when we first talked about it on the site, we were at another reload zone. So we were in like a reload zone within a reload zone within a reload zone. The only caution that I would have about this, they did a big sort of shakeup of the board of directors. That's why the stock was a bit weak recently. And the earnings numbers, not so great. So this is probably more just trade location right now more than anything else. And it is a pretty heavy stock. It's one of the more senior silver stocks, 250 million shares out. So you're not coming in and buying on the cheap here. This is a pretty expensive name, but I am very interested in working bids. If I can get any kind of sort of FU move here, back down into these levels, you can see we're not really that far away. I'll be more than happy to go and pick up a few shares here on the cheap if I can get it against all the bottom ends of the ranges here. So there's an idea for you to chew on. Some of the silver names are looking really interesting. A lot of the senior silver names, they look very, very, well, not very, very, they're just not in the best trade location right now. This is the only one that I found that looked actually pretty appealing. All right, moving on. We should probably talk a good chunk about crypto here. Of late, my message to the public, of course, was I believe that this whole sort of crypto rally, in my opinion, was all basically based on this Litecoin halving fundamental event. We've talked lots in recent broadcasts about how basically this thing usually likes to top out about a month or so ahead of its halving event. So it's basically done that now. Congratulations to people on the site who both shorted crypto on this down move. We had a lot of people banging out big wins on the site this morning. So super excited, super pleased to see that kind of conversation. But clearly you can see that the fluff, the air is coming out of these markets. From sort of, Bitcoin dominance, crypto dominance, Bitcoin is outperforming, if you will, on the short term, just because it isn't going down as much. Litecoin, our conversations about halving events and, fundamental drivers, I think that makes a lot of sense. Ethereum, lots of FUD going around about how, they're talking about using Bitcoin Cash now to deal with scalability. I'm certainly not the expert on crypto, and yesterday a lot of guys schooled me on, things like anonymousness of Bitcoin transactions and stuff. So, I'm not going to bill myself as a quote unquote crypto fundamental expert. What I am going to simply say is it's interesting how Ethereum has worked its way down. We're tagging now Mountain Man level 61.8. We're coming finally back down into value. So it's going to be really interesting to watch how Ethereum acts here over the next little while. But certainly no rush to go out and buy a whole whack of any of this stuff right now. I think you just got to cool your jets. We've talked a lot of late recently about how I felt like that this was just nothing more than a trading range. And the resolution of 38.2's good old Ray Barbecues level is really going to sort of give us the tell. So the fact that we broke through the bottom part of this range, that low there on stamp was 96.14, printed 94.67. So that has been broken now on an intraday basis. This tail has been violated now, so that doesn't help the bull's case whatsoever. And if I understand correctly, a lot of this weakness that we're seeing in crypto is now to do with the U.S. Congress. And keep in mind, Congress passes the laws in the United States. And Congress right now is not happy about Facebook cryptocurrencies, and they really want to crack down on regulation in this space. So really, it shouldn't surprise us in the face of that we're seeing some serious weakness. Interesting levels on Bitcoin in that we've been posting out tweets and messages to the public that this was a very well-defined bearish AB equals CD. In fact, we had two bearish AB equals CDs taking us down into this level. We had this cheeky little trend line that is basically at that level. So put it all together, I think we've come into this sort of confluence of levels level that I've been squawking about on Twitter of late. But also, too, I think this is a really, really good lesson for everybody here. The buy the dip people, that's, it's dangerous. And, just the price dipping into itself, that's only one reason to justify taking a trade. And I highly, highly encourage everybody, if you are thinking about risking your hard-earned money in the marketplace, try and at least have 3 unrelated reasons to consider taking a trade. And we put these tweets out yesterday. It was very encouraging to see the U.S. Treasury Secretary basically put this bullish divergence in the market. But that's only one reason. And yes, we had half-decent trade location, 50% of the entire range, reload zones of a smaller range. There's 78.6. You can see how it was tagged repeatedly. And so we had location, we had indicator confirmation, but we just didn't have any structure here. And I put out lots of tweets yesterday. I was really worried that people were going to go rah, rah, bull. This is it, straight up. And unfortunately, what often happens is you see this downtrend line. Yes, we did break it, but quite often, if the market can't find any follow-through buying following that event, i.e. market structure, W's, all that kind of stuff, the market actually will have to come down back to this trend line, and we may even just keep riding this trend line down. So a big, big warning sign. Like I said, I was so pleased yesterday on this fractal. If we drill down to the lower time frames, let's see if I have that chart handy. We actually had a lot of sort of bearish setups off of these lower time frames. You can see the M that came in price. You can see we had this funny little div. We had Willie actually get stupid. And then, of course, on the break this morning of this trend line, really good example where here you can see on the break of the trend line, we actually did get market structure failure. And wow, as soon as we lost that level, look out below. So you can see the bears are still very, very active here. Basically, in the daily brief, we counseled everybody, look, don't be a hero. Let's let this thing settle down. We got to start now seeing whether these bull divs are going to be broken on things like Bitcoin off of, that MACD one. But this chart in particular that I was showing you, this MACD div, we might be painting now double divergence. We love double divergences. So long and short of it here, got to cool our jets. We're coming into finally a really interesting level. Now, can we please get some sort of market structure as long as these divs still hold? I'm leery because you can see M's in both OBV and momentum indicators. You can see the bears waking up again. So again, I've said this a couple times. I don't think anybody needs to be a hero here. Let's just slowly wait for this thing to try and turn and show us signs of bottom. The closing thought that I'll leave with you guys here today, kind of interesting to see. We were talking about this while getting this daily brief summary going. This is the chart I wanted to show you. It looks to me like Ethereum is finally starting to come down into some interesting levels here. This looks like there's still a little bit more pain. This is relative to Bitcoin. But, we're now finally back down into original bottom. So, if anything, this is the old cliche. We're probably closer to a bottom than a top on this sort of Bitcoin dominance story. Still persisting. Don't be a hero. Don't get in front of this thing. Let's start seeing some W's like this kind of action down here before we start getting too bullish again. So, all right, I think we'll leave it at that. I don't know how long I was, but I'm sure I went overboard again. But I hope you guys got some good ideas out of today. And of course, as always, remember what your number one job as a trader is to do, and that's to make darn sure you can come back and play the game again tomorrow. All the best, everybody, and bye for now.